Hello viewers, welcome to my channel. I'm Hashim. So far 18 problems I've completed on computing the income from capital gain. Now in this video 19, 20, 21, three more problems I'm going to explain. So almost every problem you will find some or the other new points we are coming across in every problem. So focus on those new points. Particularly in this video, some exemptions will be given from capital gain. So on satisfying some conditions, exemptions are allowed in which his income from capital gain will decrease. So if you want the perfect knowledge, watch all the videos from beginning till end. So particularly the problems are based on theory. So if you have not watched, I suggest you go to the playlist of my channel, select the subject income tax for the assessment year 23-24. Watch the initial videos on theory regarding how to compute the capital gain. Be perfect about the meaning of capital gain, what is capital asset, what do you mean by transfer of capital asset, how to find out indexed cost of acquisition, all these things I have explained. Now, before starting the 19th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points, then I'll explain all the points in detail. Now, see the 19th problem. Sri Sadhuram is holding the following assets in his business for the last 23 years. He sold all the assets during the previous year. Calculate capital gain and tax liability if income from house property is 84,000. One point already in the previous video, previous problems I have explained. If an asset is used in the business and which is a depreciable asset, then gain arising on the transfer of those capital asset always will be short-term capital gain. Irrespective of the period of holding, whether they hold for 23 years or 43 years, doesn't matter. So for any depreciable asset which is used in the business, the gain arising will always be short-term capital gain, not long-term. The indexing will not be done. So which are the assets on which depreciation is allowed? Building, machinery, furniture. Actually, 4 assets are given. Building, machinery, furniture, land. But out of 4, 3 are depreciable. Building, machinery, furniture are depreciable. Whereas land is not a depreciable asset. Depreciation is not allowed on land. So any gain arising on land is a long-term capital gain because it is held for last 23 years. So whereas the gain arising on building, machinery, furniture is a short-term capital gain. See, I'm not writing all these points on the board. In examination, you must write the points. Then only you should start computation. Otherwise, you will not get the marks. So always keep a notebook, calculator, pen ready while watching this video and note down important points which I am explaining. And these are the provisions of Income Tax Act. So you must write those provisions in examination. What is that? Machinery, building and furniture. These are depreciable assets which are used in business. So gain arising is a short-term capital gain irrespective of the period of holding. Land is not a depreciable asset, so gain arising is a long-term capital gain because it is held for more than last 23 years, right? Now first we calculate short-term capital gain on 3 assets. Sri Sadhuram, computation of short-term capital gain for the assessment year. Building, machinery, furniture. Consideration received, that is the sale price. Given in the problem 35 lakh, 1090, 30,000. Transfer expenses are given 2%, 8%, 15%. 2%, 8%, 15%. So 2% of 35 lakh, 70,000. 8% of 10 lakh, 90,000, 87,200. And 15% of 30,000, 4,500. Subtract. You will get net consideration. From net consideration, you should not calculate indexed cost of acquisition because it's a short term. For short term, no indexing is allowed. Whatever book value is given, that book value will deduct. So book value of the asset 23 lakh 15,000, 11 lakh 5,000, 22,000 given in the problem. Subtract. So first building, we are getting positive value, 11,15,000 positive value, so short-term capital gain. For machinery, it is 10,02,800 minus 11,05,000. There is negative minus 1,02,200. There is a loss, short-term capital loss on sale of machinery. Furniture, positive value, short-term capital gain. So out of 3, 2 we have short-term capital gain, 1 we have short-term capital loss. So we can set off. According to the provisions of Income Tax Act, the loss can be set off from gain. The short-term capital gain on building, short-term capital loss on machinery, and short-term capital gain on furniture. So 11,15,000 minus 1,02,200 plus 3,500, 10,16,300 is the total short-term capital gain. Now income from house property is given in the problem. Last line it is 84,000. So 84,000 is income from house property, and short-term capital gain is 10,16,300. So total normal income is 11,300. Remember, short-term capital gain is taxed at slab system along with other incomes. Along with other incomes, there is no separate rate of tax. The slab system will apply along with other incomes. So total. Now computation of long-term capital gain on sale of land. Consideration received 8,51,000 and selling expenses are given 1%. 1% of 8,51,000, 8,510. Net consideration 842,490. From that, indexed cost of acquisition because it is a long term. So what is the actual book value? 1,20,000. So 1,20,000 into 331 is the current previous year index. Current previous year is 22-23 and assessment year is 23-24. So during the previous year 22-23, the index number is 331. It is not given in the problem, but you must remember for current previous year. 331 by 100, 397 total. The long-term capital gain 4,45,290. So we got normal income 11,300 and we got long-term capital gain. So separate tax will be applied on LTCG. So first we calculate what is the tax liability on normal income. Up to 2,50,000, first slab, income is 2,50,000 nil, no tax, basic exemption limit 2,50,000. Second slab goes from 2,50,001 to 5 lakh. The income comes to 2,50,000. 5% is the rate of tax for the current previous year. So 5% of 2,50,000, 12,500. The next slab goes from 5 lakh 1 rupee to 10 lakh. From 5 lakh 1 rupee to 10 lakh, the income is 5 lakh. On that 20% is the tax, 1 lakh. Now balance. Because over 10 lakh, whatever income is there, 30% is the rate of tax. What is the normal income? 11,300. From 11,300, subtract the first 3 slabs, 250, 255. That means 10 lakh. 10 lakh you subtract, the balance is 1,300, 30%, 30,090. The total tax on normal income is 1,42,590. This is the tax on normal income. Now we add tax on LTCG, 20%. LTCG is 445,290. 445,290 into 20%, 89,058. Total 2,31,648. There is no surcharge because income is below 50 lakh. No surcharge. So directly we add health and education cess 4%, 9,266. So tax liability comes to 2,40,914. So round it off to the next 10 rupees. So last one is 4 rupees. Ignore 4. So 10. 2,40,019. If it is 915 or more, we would have taken 20. But it is less than 5. So we are ignoring this 4. 910. 2,40,910. That is the tax liability, tax due. Over. Now I am coming to the next problem, problem number 20. Now here we are having exemption under section 54. Mr. Murthy sold a residential house in Mumbai for 36 lakh. The cost of acquisition 16 years ago was 8 lakh. Cost inflation index 100. After 3 months, he purchased a flat for 38 lakh 50,000. Selling expenses 1.5%, calculated income from capital gain. The new point in this problem is the assessee sold a residential house and within a stipulated period purchased another residential house. So he will be allowed exemption under section 54. Income Tax Act has given section 54. When an assessee sold one residential house and purchased another residential house within 2 years or constructed a new residential house within a period of 3 years, then exemption will be allowed. That is the new point. So first of all, we will take consideration receipt. Consideration received 36 lakh. He sold the residential property for 36 lakh, on which selling expenses are 1.5%. So 1.5%, 54,000. Subtract net consideration 35 lakh 46,000. From this we deduct indexed cost of acquisition because it is a long-term capital asset. The purchase price 8 lakh and current to previous year index 331 and index number of the purchase year was 100. That is given in the problem. So total 26 lakh 48,000. Subtract, we'll get capital gain 8 lakh 98,000. Now the new point. From this capital gain, we have to deduct the exemption under section 54. So what is that exemption? Here in working note, you must write in examination. The assessee has transferred a residential house and purchased another residential house. The condition given by Income Tax Act is, if an assessee sold one residential house and from the proceeds purchased another residential house, then only exemption will be given under section 54. The exemption is list of the following two amounts. The cost of the new house. The cost of the new house or the amount deposited in a capital gain account scheme in a nationalized bank. Here in our problem, it is not given. But remember, the next problem I will explain you in detail. So cost of the new house is 38 lakh 50,000. And the capital gain amount is 8 lakh 98,000. So whichever is least, that is 8 lakh 98,000. That is the exemption under section 54. So here exemption is 8 lakh 98. Subtract 8 lakh 98,000, capital gain LTCG will be nil. That's it. This is the end of problem number 20. Now 21st problem. Here again one or two new points are there. Concentrate now. Srimati Jyoti, aged 42 years, non-senior, owned a residential house at Haridwar city. It was acquired by her on 6th July 2004 for 12 lakh 43,000. This is the cost of acquisition. And CII, cost inflation index, was 113. On 3rd December 2022, she entered into a contract to sell the house to Mr. Pradeep for 40 lakh. And received 1,50,000 as advance. Before the due date of agreement to buy, Pradeep expressed his unwillingness to purchase and rupees 90,000 advance money is forfeited. Already in previous videos I have explained you the provision of Income Tax Act regarding the money forfeited in a sale transaction. If the amount received is forfeited before 1/4/2014, it should be deducted from cost of acquisition. But if the amount received, if the advance received is forfeited after 1/4/2014, then this advance received will be treated as income from other sources. We should not consider this advance received from computing income from LTCG. So here the advance received and forfeited is on 3rd December 2022. That means after 1/4/2014. So this advance money forfeited 90,000 is taxable under income from other sources. That you have to write in working note. On 2nd March 2023, Srimati Jyoti sold the same house to Mr. Varman for 65 lakh and the state government valuation is 72 lakh. During the current year, she has sold the house to another person. The sale consideration was 65 lakh, but the state government valuation is 72 lakh. Again, Income Tax Act has given the provision. If the stamp duty value is more than 110% of consideration received, then we must take the stamp duty value. Here actual sale consideration was 65 lakh only, but the government has fixed the stamp duty value as 72 lakh. So if you calculate 110% of 65 lakh, it is below 72 lakh. That means stamp duty value is more than 110% of consideration received. 110% means it comes to, see here, 65 lakh. 65 lakh into 110%. It comes to 71 lakh 50,000. So 110% comes to 71 lakh 50,000. But the stamp duty value is 72 lakh. So 72 lakh is more than 110% of consideration. So we should take stamp duty value. So 72 lakh we should take consideration receipt. And on 15th March 2023, she purchased a residential house in Chennai for 38 lakh and deposited 12 lakh in SBI under capital gain scheme to construct one more floor in the new house. Compute tax liability if income from other head is nil. There is no selling expenses, no transfer expenses, nil. So net consideration 72 lakh. From this we deduct the indexed cost of acquisition. That is 12 lakh 43,000 years purchased into 113 divided by 331 divided by 113. 113 is the index number of the year of purchase that is given in the problem. So it comes to 36 lakh 41,000. Subtract capital gain comes to 35 lakh 59,000. Now the SSC has sold one residential house and purchased another residential house. So exemption is allowed under section 54. So here less exemption under section 54. In working note you should show. You should write what the SSC has sold one residential house and purchased another residential house. So exemption under section 54 is allowed to the least of the following two amounts. First is the cost of the new house plus amount deposited in a nationalized bank under capital gain account scheme. So in our problem, he has purchased a new house for 38 lakh. And apart from that, he has deposited 12 lakh rupees in capital gain account scheme. So that is also eligible for exemption. So 38 lakh plus 12 lakh, 50 lakh rupees is the total cost of acquisition and amount deposited or amount of capital gain. How much is the capital gain? 35 lakh 59,000. So 50 lakh or 35 lakh 59,000, whichever is lower. So 35 lakh 59,000 is lower. That is allowed as exemption under section 50. So deduct, you will get nil. So long-term capital gain nil. He is having only one income from other source. That is advance money forfeited, 90,000. The SSC is a non-senior citizen. So basic exemption limit is 2,50,000. So his total income is below 2,50,000. 90,000 only he is having. That means his tax liability is nil. Long-term capital gain is nil and income from other sources is also below 2,50,000. So tax liability is nil. So in this video, three problems I have explained: 19, 20, 21. Inshallah, we will continue the next problem in the next video.